Hello everyone, welcome to the DWA Minute for All ETF. Today's date is Thursday, March 31st. My name is Sydney Siek and joining me today is Amy Kemp. We are both analysts here at Dorsey Wright & Associates. And today is the last day of the first quarter of 2011. And at the end of every month or every quarter, we like to do a review, a snapshot review of what has happened in the market, specifically in the ETF market.
Right, yeah, and typically we like to look at the domestic sectors or domestic equities to see what type of trends we can identify. But for this quarter, the past 3 months, we wanted to kind of spice it up a little bit and look at the commodity space and the international space. If you've been keeping up with the recent articles on alletf.com, you've probably noticed that we've had a little bit of a slant towards the commodity space, and that's because there have been a lot of opportunities. We've seen a lot of improvement across that asset class as a whole over the past 3 months. But there have also been some interesting observations, to say the least, in the international space. Most of the news so far this year has revolved either around the Middle East or Japan, but those aren't ETFs that jump out on the page when we run the performance numbers. Some of the ones that we did find, however, Sydney's got for us.
Well, some of the I was working on that list earlier today, and I was surprised to see that Spain and Italy have jumped up in their ranking in terms of the performance numbers. They're obviously in the developed market ETF, and we haven't seen developed market residing in that top spot, for a long time.
Yeah, typically any type of quarterly performance or longer term snapshots, even annual performance, the top spots are reserved for those emerging markets. But now we're seeing some of those developed markets creep back up, which is interesting.
Yeah, that is interesting. And specifically the iShares Spain ETF, ticker symbol EWP, is up about 15% for the quarter. And right below it is Italy iShares Italy ETF, EWI is the ticker symbol, up about 13%. And right below us, we also see emerging Europe have been improving lately for the first quarter.
Or continuing to be strong, really. That's been an area of strength, right?
Right, yeah. And if you look at the best performing ETF, let's say that for the for last, the best one is the Russia ETF, iShares Russia, ticker symbol ERUS. It's up about 16% for the quarter. And Russia is a commodity-driven economy, and Amy has some story behind that.
Yeah, well, it's interesting that it's the best performing ETF, country-based or international ETF, because it is a commodity-driven economy. And when you look under the surface in that Russia ETF, or even in the Spiders version, the RBL, you'll see that a lot of the sector exposure goes to sectors like basic materials and energy, which obviously are going to be more commodity-driven. And if we look at just the pure commodity plays in the ETF world or industry and their performance over the past 3 months or so, we see that the top spots really go to energy or oil, silver, and cotton. Cotton was actually the best performing. It left all the others in the dust. It was up about 43% for the year so far. And just below that, we see a lot of, like I said, crude oil exposure. Crude itself was up 17%, but you can look to something like the BNO, the United States Oil Fund, which is up almost 25% for the quarter. Then we've got things like the SIVR and the SLV, which are physically backed silver ETFs. Those are up about 20% or so. And then the DBS, which is also a silver ETF or a silver commodity ETF, but instead of being physically backed, it's actually investing in those futures contracts. And that's a product from PowerShares. And they have a whole lineup of PowerShares DB commodity ETFs, which all invest in the futures contracts. So those offer a great way for people to play the commodity space, where previously you really could only turn to the futures market. Right. So just some things that we've seen on our radar screen so far in 2011. I think that's all we
have
got for today. So hopefully we'll be joining you next week.